History doesn't repeat itself, but it often rhymes. And right now, the world is hearing echoes of 1929.
It doesn't always repeat itself, but it leaves whispers, warnings for those who care to listen. The year 1929 changed the world forever, leaving behind lessons that are still relevant today. As we look at our modern economy, patterns begin to emerge, patterns that mirror a time when the world was unprepared for disaster. The stock markets rise and fall, confidence waxes and wanes, but the underlying risks often remain hidden until it's too late. Wall Street, 1929. Crowds of investors gathered outside the New York Stock Exchange, eyes glued to the ticker tape. Confidence was high. Wealth seemed endless. Yet beneath the surface, cracks were forming. Bankers and investors often ignored warnings, believing markets could only climb higher. It was a world intoxicated by success, unaware of the storm brewing on the horizon.
Today, the world stands at a crossroads. Modern markets rise daily. Debt reaches new highs, and confidence seems unshakable. Yet, when we compare today's economy with 1929, alarming similarities appear. Rising asset prices, unchecked borrowing, and overconfidence hint at vulnerabilities we often overlook. The question is no longer about prosperity, it's about resilience, preparation, and understanding history's lessons. The ghost of 1929 still lingers. It waits silently, reminding us that wealth and progress are fragile. Will we heed its warning, or are we destined to repeat the mistakes of the past? As we journey through the events of that pivotal year and explore the echoes in today's economy, consider what lessons we might have ignored and what could be coming next. The 1920s were a decade of excitement and innovation. Jazz music filled the air, luxury cars became symbols of success, and cities sparkled with prosperity. People believed the good times would last forever. The economy seemed unstoppable. Yet beneath the surface, financial inequalities grew, and many invested with little understanding of risk. It was a golden era built on fragile foundations, where the gap between optimism and reality widened with each passing year. Investors poured money into the stock market at unprecedented rates. Prices soared far beyond the real value of companies. Everyone believed the market could only rise. Newspapers celebrated record highs, and stories of sudden wealth became legends. Speculation became the norm, and a culture of risk-taking flourished. Few paused to ask, what would happen if the bubble finally burst? To participate in the boom, many borrowed heavily. Margin buying, the practice of purchasing stocks with borrowed money, was rampant. People believed they could never lose. Banks encouraged lending, fueling further speculation. This unchecked optimism laid the groundwork for catastrophe. When debt rises unchecked and confidence overshadows caution, the stage is set for disaster. Even as prosperity reigned, subtle warnings emerged. Analysts cautioned about overvaluation, yet few listened. The world was intoxicated with growth and wealth, blind to the cracks forming beneath their feet. Storm clouds gathered over Wall Street, symbolic of the coming crash that would shake the foundations of the global economy. October 29th, 1929. Black Tuesday. The stock market collapsed almost overnight. Investors panicked. Wealth that had seemed untouchable vanished in hours. Banks, overleveraged and exposed, failed in waves. Ordinary people were suddenly thrown into uncertainty, realizing that prosperity could disappear faster than they could imagine. The sense of shock and disbelief permeated the streets. People struggled to comprehend the scale of the disaster. Families lost homes, savings, and livelihoods. Soup kitchens and relief lines became common sights. Children stared at empty plates, while parents grappled with despair. The human cost of financial collapse became painfully visible.
Economic theory transformed into daily reality. Millions were left to navigate the harsh consequences of decisions made in boardrooms far above their reach. The Great Depression was not confined to the United States. Across Europe and Asia, markets fell, banks shuttered, and governments scrambled to respond. Trade slowed, jobs disappeared. The world had never experienced such interconnected financial disaster before. This global ripple effect revealed how deeply economies were intertwined and how quickly confidence, or lack thereof, could spread across nations. Children watched their parents struggle. Communities relied on one another to survive. The psychological toll of uncertainty reshaped families, industries, and governments alike. Lessons were learned, though often forgotten in later decades. The ghost of 1929 lingered, waiting for new generations to heed its warning. Today, global markets soar to record heights. Digital trading platforms allow anyone to buy and sell stocks instantly. Confidence appears boundless. Yet beneath the surface, systemic risks grow, unnoticed by most investors. High valuations, debt accumulation, and reliance on market momentum echo the patterns of the past. Debt has reached historic levels, both for individuals and nations. Living costs rise steadily. Inflation reduces purchasing power. Many are unaware of how fragile the balance has become. Modern economies, despite technological advances, are vulnerable to shocks, just as in 1929. The world is more interconnected than ever. A financial disturbance in one region can ripple across continents instantly. Governments attempt to manage risks, yet human behavior, greed, overconfidence, and denial remains constant. History's lessons are clear, yet often ignored. Look closely at the patterns. Confidence is high, just as in 1929. Debt is rising, speculation persists, and warnings are often dismissed. The structures may look modern, but human behavior is remarkably similar. Understanding these parallels can help us prepare, prevent mistakes, and mitigate risks. The ghost of 1929 still walks among us. It warns of overconfidence, unchecked risk, and the consequences of ignoring subtle signs. We must recognize that financial systems are fragile and human behavior is predictable. Falling stock prices, inflation, mounting debt, all are signals that deserve attention. When ignored, small cracks can expand into systemic collapse. History teaches us to pay attention, to question confidence, and to prepare for uncertainty. Behind every statistic are people, families, communities, and individuals. The emotional and social consequences of economic collapse are enormous. Preparing for uncertainty is not just about wealth, it's about preserving lives, hope, and stability. History whispers to those who listen. The ghost of 1929 is still present, reminding us that prosperity is fragile. Will we learn from the past or repeat the same mistakes? The choice is ours. The lessons are clear, and history is watching. History doesn't ask for attention. It waits to see who is willing to listen. If this story made you think, if it made you question the future, then this conversation must continue. Subscribe to this channel for more deep dives into history, power, and the forces shaping our world. Share this video with someone who believes the system can never fail. And tell us in the comments, do you think we are prepared, or are we repeating the same mistake all over again? Because history is watching, and this time the choice is ours.